We all work so hard for our income, right? But have you ever really stopped to think about what that paycheck truly represents? And maybe more importantly, what would happen if it just disappeared? Well, today we are going to dive into the real value of your income and figure out if it's as secure as you might think. Just take a second and picture everything that makes up your life. Your home, the food on the table, your family, your dreams for the future, all of it. Every single piece is supported by one thing. And that brings up a really important question. So what do you think it is? I'll give you a hint. It's not your house. It's not your car or even your 401k. Your single most powerful, most important asset, bar none, is your ability to get up every day and earn a living. It's your income. So let's really unpack that. Thinking of your income as your most valuable asset, because it is so much more than just a number on a pay stub. It is the engine that drives your entire life. It's what pays for today, and it's what builds your tomorrow. It turns all those big life goals into an actual reality. But what happens when that engine just stops? This is the one thing that can bring it all to a grinding halt. An unexpected illness or an injury that knocks you out of the workforce for a long, long time. Look, nobody wants to think about this stuff, I get it. But a long-term disability can have an absolutely massive and honestly devastating financial impact. We're not just talking about a missed paycheck. We're talking about something that can completely derail your entire financial future. So just how big of an impact are we really talking about here? $1.5 million. Let that sink in. That's how much a 35-year-old making a pretty normal salary of $50,000 a year stands to lose in future earnings if they get permanently disabled. This isn't some small fringe risk. For most of us, it is a multi-million-dollar risk hiding in plain sight. Okay, I know what some of you are thinking. I'm good. I've got disability coverage through my job. And you know what? That is a fantastic start. But relying only on that coverage, well, that reveals a pretty major flaw in the plan. So what most of us have is something called Group Long-Term Disability, or GLTD for short. It's designed to be a safety net, right? It usually replaces about 60% of your base salary if you can't work. And on the surface, 60%, that sounds pretty decent. But as they say, the devil is in the details. Because that safety net, it starts to look a lot more like a fishing net with some really big holes. See, these plans often only look at your base salary, completely ignoring bonuses or commissions. And if your employer pays the premiums, which is super common, guess what? The benefits you receive are taxable. Then you've got caps on how much you can even get each month, and you can't take the coverage with you if you leave your job. The problem starts to become pretty clear. So you take all those things, the taxes, the caps, the income it doesn't even count, and they all add up to a huge shortfall. And that shortfall has a name. This is the core idea we really need to get our heads around. It's called the disability income gap. To put it really simply, the DI gap is the massive difference between what you're used to taking home in your paycheck versus what you'd actually get after taxes from your work's disability plan. And trust me, for a lot of people, this gap is way bigger than they could ever imagine. Let's make this real. Let's meet John. John's doing pretty well for himself. He's got a base salary of $100,000 plus a $50,000 bonus. His company's GLTD plan covers 60% of his salary, but it's capped at $5,000 a month. And since his employer pays for it, those benefits are going to be taxed. So when you actually run the numbers for John, the gap is just staggering. His yearly take-home pay is about $112,500. But his group disability plan, after you factor in taxes and the fact that it totally ignores his bonus, would only pay him $45,000 a year. That leaves him with a disability income gap of $67,500 every single year. Now ask yourself, could your family survive on that much less? So that gap, it's a huge risk. But here's the good news. You are not stuck with it. There is absolutely a way to patch those holes, reinforce your financial foundation, and close that gap for good. The solution is getting your own individual disability insurance policy, or DI. See, unlike the group plan from your job, an individual policy is specifically designed to fill these holes. It can be set up to cover your bonuses. Because you pay the premium, the benefits come to you completely tax-free. And this is huge. You own it. It's portable. It goes with you no matter where your career takes you. The terms are locked in. It's your personal safety net. Okay, so now you get the problem. You know there's a solution out there. So that brings us to the most important question of all. What does this gap actually look like for you, personally? It's actually not that hard to get a pretty good idea. You can do it in 3 simple steps. First, just figure out your total income. That's your take-home pay, your bonuses, the whole shebang. Second, you got to dig up those employee benefits documents and find out exactly what your group plan would pay you after taxes. Then, step 3, just subtract that benefit amount from your income. That number you're left with, that's your potential DI gap. It really all comes back to this one central idea, which the source material nails perfectly. Your income is the foundation of every financial strategy you put in place. Think about it. Your retirement, your savings, your kids' college funds, your mortgage, everything you're building rests on the assumption that your income will keep coming in. Protecting it isn't a luxury, it's absolutely fundamental. So, I'll just leave you with this one final thought to chew on. You've spent your entire career building this financial foundation. The real question is it strong enough to actually withstand a storm? Thanks for watching.